This is Chip Daly here with Startup Boston, and I am with Brian Fakhoury today. Brian, thanks for joining. He is a current analyst at Underscore VC, and he's joining us today to talk a little bit about crypto, his experience with crypto, and particularly within the Startup Boston ecosystem. Brian, thanks for joining. If you'd just like to give us a little bit of background about how you got into crypto and how you find yourself at Underscore VC today.
Yeah, absolutely. And I'll keep it quick because I think the path into VC and crypto for everybody can be long and arduous. But graduated from Boston University 2020, studied neuroscience and computer science there, but was mostly involved in the entrepreneurship club. Had been part of this university-oriented venture fund called Contrary. Had done some other VC things, so it was a great and fortunate step to join Underscore when I graduated college. I'd actually been into crypto since probably early high school. My story goes along the lines of I really liked building computers, but I was never a gamer, so I had kind of some horsepower on the side that I wasn't really using. Turned out it was pretty good for mining Bitcoin, Litecoin, just these just these early things. But that didn't really get me too deep into it. That's like the next kind of step I took into the crypto space was 2017. There was this there was a hype cycle going on, and I was actually living in SF, which is in some ways kind of a lot of crypto centers around San Francisco. And anyway, so I actually I was doing like web development stuff that summer, but at night I was just like fully involved in simple crypto things like trading, reading up on what was the latest, and I think my enthusiasm and for passion for it kind of showed to other people, and they wanted me to run a fund essentially. So I ended up starting a small crypto fund in 2017, which I ran with a friend of mine for about 3 years. I closed that down last fall to focus more on Underscore and other things. Right when I joined Underscore, crypto is now entering a new type of hype cycle. This time I got, I'd say like as deep as I could go necessarily. This was last summer. There was a phenomenon called yield farming. There was all kinds of new projects that weren't just cryptocurrencies launching. It was in my head now, crypto is a more broad term than cryptocurrency. So all that stuff was exciting and happening, and I ended up talking to the partner I work with at Underscore, and we said like, look, we need to be committing up like most of our time to this. And so I was like, look, I've been here for a few months and had joined as like a generalist, was like looking at like AI ML stuff and all kinds of different hard tech deals, and then all of a sudden it was just like crypto 95% of the time. So that's where we're at today, and we're trying to be kind of forward thinking Underscore in terms of what it means for VC to invest in crypto, because I mean traditionally like equity investing doesn't necessarily fit the entire bill that crypto needs, and so we're playing around with all kinds of stuff there.
That's awesome. Yeah, thank you so much for that background. And for our audience who's interested in crypto, obviously they're going to know some of the terminology you've been throwing out and referencing. But for those more generally who just kind of had heard the term crypto or cryptocurrency before, what exactly is maybe the difference, like you were talking about, between crypto and cryptocurrency? And just for the general audience, could you give like a broader definition of when we think of crypto, what exactly is that?
Yeah, so I mean, obviously, crypto derives its name from cryptography, which is used to build these decentralized systems of ownership. So before like Bitcoin, before generalized crypto existed, there's no way to own something digitally. The only way that you could create this mirage of ownership by having some server somewhere that's a trusted centralized entity, and you could sort of build ownership. Like I guess the example I would give there is like if you play like a game like League of Legends or whatever, and you own some sort of skins or something, that's like primordial ownership in a way. You own it, but if the company goes up or they ban you or whatever, you lose that. And so something that's really important to replicate in the virtual world is like true ownership. Like true ownership, it means that only you can have access and custody to that. So early days crypto was cryptocurrency. It was just true ownership of a digital currency. Today, that looks a lot broader than just currency. So think of assets in general, securities, bonds, like just all your standard financial instruments, and even more complex things like derivatives have been built out. It also looks like crypto art. So that's the whole NFT craze that's happened recently. You have kind of true ownership of what we interpret as art. So when you say crypto, it's this overarching theme of digital goods, digital assets that you own. Yeah.
Awesome. No, it's super helpful. And in terms of sort of headlines, recently we've been seeing a lot about how the government is starting to consider regulating and how they would regulate cryptocurrency.
Mm-hmm.
How has that been affecting your job, and how exactly is that affecting the space for startups in Boston, but also more generally?
It's a really good question, and I think what people need to understand here is that there's multiple levels to what's being built. So at the very lowest level, it just can't be regulated. The underlying technology, the blockchain technology, the ownership of the assets is, and I would venture as far as it's as synonymous as like trying to control physics. It is backed by math, and if you can perform some mathematical function on your computer, then you're able to access this whole world of stuff. And so trying to restrict that would be equivalent to like restricting free speech. I would say that. Now, when you go up a layer and you start looking at offering services that under the hood use blockchains that use crypto, that's where the regulation comes in. I think an example that probably like the broad audience can understand is an example is there's this thing called Uniswap. It is a decentralized exchange. So traditional exchanges we're all used to, NASDAQ, New York Stock Exchange, Coinbase, like all those things are entities that are controlled, and they allow you to trade, for example, stocks. They allow you to trade cryptocurrencies, and they fall under regulation, and they have to listen to regulation because the government can step in and pinpoint the servers, pinpoint everything that's making this work. Okay, right. So Uniswap was a huge step forward in the crypto world. In 2018, it launched. It was a piece of immutable code on the blockchain, which allows any two parties to create a market for a token. And there's nothing that can really stop anybody from doing that. The only thing between like UI and the actual code on the blockchain there is the interface, like the website that we need to access it. So when you think of regulation and offering these services, you actually think of changing, of forcing regulation on the UI or the interface to the blockchain. And for 99% of people, like to them, that's just going to look like normal regulation. To like the 1% or the 0.1% of kind of hackers or cyberpunks out there that know how to use blockchains functionally and through a command line or something, they can continue using it. It's and like it's not about making it comparisons to like illegal products out there, but if you think of something like the Tor network, right? Like Tor is used for all kinds of bypassing the law for sharing files, but like it's like incredibly neutral technology fundamentally, right? It just says like how can we share files peer to peer without everybody having to have a copy of the file. And so in theory, your ISP can block the Tor networks, and you can have all kinds of like things spying on it, but like the underlying technology is permissionless. It's similar to the laws of physics, as I like to say.
Gotcha. That's super interesting. And in terms of companies who are sort of attacking it from these different veins off of the baseline foundation, be it like the art route, be it more so in the currency, what sort of things are you looking at as an investment analyst at Underscore, and what sort of traits in companies are you looking for that would make for good equity investments?
Yeah. Okay. So there's a key point you say there, and that's equity investments. Historically, in the crypto space, a lot of things were equity investments. Today, I'd say like the most successful VCs in crypto are not making equity investments. Actually, they're buying tokens of these projects. I tend to say that tokens are like a superset of a stock of like joint stock equity, because they can do everything that a share in a company can and more. They can be used for incentives. There's a whole permissionless world of things that you can do with tokens that way. But to answer your question, like what do I look for? So again, going back to what I was talking about earlier with Uniswap, there's a difference between protocol and interface. So interfaces are going to be crypto banks out there. Coinbase is like an example of an interface. They allow you to interface with blockchains. Example of a protocol is the Uniswap protocol. It's just a piece of code on the blockchain that once it gets deployed, like nobody can change it anymore. It's set in stone. And the interesting thing about protocols is they can have a token that gets value driven to it. Okay, so Uniswap is not the best example here, but let's take like a broad example. Say there's a decentralized exchange, we call these DEXs, and it's just some code on the blockchain somewhere, and it takes a percentage of every trade. Okay, if it routes that percentage of every trade to a token on the blockchain, that token accrues value from the usage of this protocol. Now, because these are permissionless systems, the chance of these things being around and not having friction going into the future is massive. I would say that like some of the most fundamental protocols that have been deployed onto blockchains now can exist for hundreds of years. And I mean, obviously, like who knows what the world's going to look like in 100 years, but that code will still be there, and technically there are tokens that could still be accruing the value from that.
Right.
And then that plus a global market means like that the premium for these tokens can be absolutely massive. So that's one thing we look at, and a succinct mental model of that is we call it like the protocol density. It basically says like how useful is the protocol and how easy is it to attack. And if it's very, very hard to attack, like a very simple trading protocol, those are like basically impossible to attack, but they have massive utility because economies are built on trading. Those are the most dense investments, and you want to always look for those things. So in terms of decentralized exchanges, the DEXs, like those have kind of been most of the big ones are already, like the winners are already there, but that thesis also applies to things outside of DEXs. That can apply to NFTs. It can apply to bringing outside world data on chain, like how if I want to bring information about oil and gold and stuff onto the blockchain in order to create derivative markets, that those can also apply there.
So would you say that there's one particular sort of usage that crypto has had, say in one industry or whatever, that you've been seeing a lot of recently? And if so, what is that? Like, what does that company look like?
Okay, so if you haven't heard the term before, you're going to hear it now, and you're going to keep hearing it for probably the foreseeable future. It's called DeFi, decentralized finance. There's a really strong argument that I agree with that it is the first killer app of blockchains, and specifically it was founded like on the Ethereum blockchain, but it exists on a lot of other blockchains now. Decentralized finance, Uniswap is an example of decentralized finance. It says when we turn the middleman of the financial ecosystem into an immutable piece of code, we no longer have this individual talking to a corporation, or you no longer have like individuals talking to each other. You have this new paradigm called peer to contract. So peer to peer, right? Like that's you and I. Like you sell me a couch and I pay you cash. Peer to peer. I go use my bank. That's peer to corporate. Individuals like a corporation. Peer to contract is me interfacing with this immutable, trustless code on the blockchain. And that actually builds really powerful markets. And because they're financial markets, that are completely decentralized, like there's no authority, we call it DeFi. That's been a massive killer app, and it's actually brought onto the Ethereum blockchain alone. There's $100 billion of value within the decentralized finance ecosystem on Ethereum. And that's, by some accounts, that's a small number still, but it's been growing rapidly. If we were having this conversation a year ago, that number was not even 10 billion, maybe 16 billion. It was less than 10 billion. So, it's massive growth in that sense. And then it's also moving over to other blockchains. So Ethereum's not the only blockchain in the world. And my analogy there is like blockchains are like economies. Ethereum's not the only economy out there. There's a lot of other blockchains popping up now, and they're all building DeFi ecosystems that are amassing billions of dollars as well. So a lot of value to be had there. And when you think of value accrual to tokens that are open and permissionless, you actually are creating very, very tangibly valuable assets, and that's what VCs want to be looking for.
Absolutely. I mean, you can't underestimate the growth there that you were speaking about. I mean, that's incredible. And for that sort of DeFi, that concept and looking into the future, is that something you're starting to see a lot of activity in the Boston area as well already? I know that there's obviously target pockets of the country, in the world for that matter, for like crypto hotspots. But I guess we in Boston like to think of ourselves as front runners in terms of entrepreneurship and entrepreneurial efforts. So are we seeing DeFi already here in the Boston area?
Yeah, we absolutely are. I do think we can do better, but we've had some crazy successes. So Uniswap, that protocol I talked about, founded by MIT grad Hayden Adams, that's Boston based. We've had a lot of innovation on blockchains, if the fundamental layer of blockchains here in Boston, but I'd say geographically, even San Francisco has had a hard time just truly capturing any single crypto success. Most of these crypto teams, communities, builders are highly globalized. The thing that we can do here in Boston is be receptive and open to builders, but to say that there's going to be like a single team, and I keep saying that, but like I keep thinking of examples. Actually, we've had some great teams come out of Boston. Let me say it that way. But I think we can have a lot more still.
Totally.
And DeFi, and actually, if I can also for DeFi,
Sure.
I think that there's still a lot more innovation to happen in DeFi, and in terms of like the underlying protocols are being built, but you and I using DeFi is still, as an average person, is still very much under the radar. Like most people, the back end of their financial system is still the traditional financial system that the United States has set up. And DeFi has a huge amount to offer there. So I think that an opportunity for Boston is to be a leader in actually consumer adoption. We do have companies in the area like Circle, which just did a $400 million round. Leading the way. They have a fantastic product called USDC. It's just a tokenized dollar. So like for every dollar you put in their bank account, they'll create one token, and then you're free to join the crypto realm and participate in all of DeFi. And so we're doing well there.
Wow. Oh, that's awesome. That's great to hear. Last question. In terms of sort of, if we think of founders who may be watching this video or working on their companies right now as we speak in the crypto world, as an analyst at a place like Underscore, what sort of advice could you give them when they're thinking about trying to get that funding themselves and building out the decks and meeting the people that they need to meet? What's something that you think would be a valuable piece of information to pass on?
Yeah. So number one is go risk on. Right now, this is a very hot market. It's definitely on the entrepreneur side. I mean, the ability to raise for a founder right now is unbelievable in this space. And so I think, and like, I don't want to say like, I don't want to call bubbles or anything, but I just want to say that to founders out there that this is a space where you can go big, like real quick. And I think that's really important to founder ethos because it encourages moonshots. It encourages, high risk taking. And like the downside, this is like, think of like the standard SaaS model, right? Like if your company blows up, you don't have massive capital assets that are wasted if you're a startup or anything. This is all software. Right. So I think for entrepreneurs there, that's step one. Step two is like, reach out to your local, to the crypto community out here. Like I'm definitely part of it. We have people that like, you go on Twitter and find this stuff, but you have like, really, really great thinkers in the Bitcoin world. You have really great thinkers in the DeFi world, NFTs here. And one way to figure that out is like go on my Twitter profile, see who I'm following. But in general, that it's not too hard to find that part of the social media sphere.
Right.
Yeah, and then step three is start building it and sending it out. I mean, I think most of the VCs here in Boston, even though like we're not all doing 100% crypto investing. Actually, Castle Island is I think 100% crypto, but we're all excited to look at the new ideas and companies being built in crypto. So yeah,
that's awesome. It's a great piece of advice and something I think a lot of our audience will be receptive to. So just want to say thank you again for taking the time today to chat crypto. It was great to get some peeks behind the curtain there in terms of the investment decisions and pick your brain a little bit. So we appreciate your time. I'll be sure to include Brian's socials below. So if you'd like to see who he's following on Twitter or connect with him on LinkedIn, that'll be there for you as well. And just to reiterate, we have Startup Boston Week coming up September 20th to the 24th. So if you want to grab your free ticket, bunch of great speakers, it'll give you a really great inside look into the startup ecosystem here in Boston. So Brian, it was great chatting with you, and thank you so much for your time. Yeah.
Thanks.